Recipes for technical trading success in Cook's Kitchen.
Hey everybody, Cooker here. Welcome back to Cook's Kitchen. I'm going to talk about AMC again because the madness continues. Last week I did a piece about, is AMC worth 10 times sales? Not really. And the feedback was, we don't care about the valuation. We're going to take down the shorts. We're going to 100. Okay, fine. So one of the best places to see the madness is on StockTwits. If you follow the AMC ticker on StockTwits, and just the feed is just amazing. I just want to show you my advice this morning to the gang, to the AMC Ape Army. So this is what I posted this morning before the open. If you want to gain insight about the psychology of trading, just read the AMC feed on StockTwits. Every post turns the essential challenge of markets on its head. From oneself as the enemy to conquer to we are an army at war. Now, I'll just unpack that because I packed a couple of concepts into that one sentence. In learning to trade, your biggest enemy is yourself, because you have to overcome your own mental biases and emotions and decision-making habits, and you need to learn how to be disciplined in executing things with rules. So the market is not your enemy. The hedge funds aren't your enemy. The companies aren't your enemy. You're your own worst enemy in markets. So, but in the ape war army, the ape army war in AMC against the hedge funds, they believe that they are an army at war. Now, this could work. I mean, it's worked in GameStop, although GameStop had better fundamentals from where it started. And I'm arguing that the fundamentals of AMC don't justify a $25 billion market cap or even a $20 billion market cap. It's a movie theater. So, but this can work, and I want to see AMC go to $100. My son already sold, by the way. My son sold at 63. So he made, 4 times his money. So he's done. And I never had a horse in the race anyway. So God bless it. Let AMC go to 100. Let it hurt some shorts. But as a strategy, this may only work once or twice, is what I'm saying. Like catching a good wave if you're a new surfer. That may work out once in a while until you build real skill, because the ocean doesn't care. The ocean doesn't care whether you succeed or not, and the hedge funds will still be there. And the bottom line is you'll never win consistently without dealing with the real enemy in markets, which is yourself. And there is no army to help you on that solo journey. All right. We're going to look at some of the crazy ideas going around in the ape army right after I review this. So this is my fundamental thesis. Should AMC be trading at 20 billion? When it gets up towards 70 bucks, I think it was near a $25 billion market cap, and that made it over 10 times sales. The company could get back to 5 billion in sales next year, and then, hey, maybe that's reasonable. But still, 5 billion in sales next year, should it be, then it's trading 5 times sales on a forward basis, which is yet to be determined. So let's see if these comments loaded here on StockTwits, because I just highlighted some typical examples of what people believe. I also sat in on a YouTube live broadcast this morning. Let's take a look at the stock while we're waiting for that. I think the guy's name was Lohr, Lohr, maybe Matt. He's got like 275,000 subscribers on YouTube. And there were 50,000 people on the call, which was amazing on this live broadcast. And this is what he does. He talks about you know, he talks about AMC a lot. So here's AMC right now, breaking down below 50 here a little bit. He's still bullish. He says this is a bull flag consolidating here. Could be right. You know, and the other thing that's helping the smaller traders is that, you know, there's players behind the scenes. This is what I talked about in my article last week. You know, asking whether AMC is worth 10 times sales. I said, of course, there are hedge funds getting involved on the long side because they see the opportunity. So, you know, they're going to play it both ways. Some of the new terms, I've been talking about this since January. I called it the GameStop revolution to take down the hedge funds. That mentality is still there. Now they use new words like it's a movement, you know, it's a fight, it's a war, they're an army. And because of sort of this moral conviction, it's almost like, hey, we deserve to make money because we're fighting a noble cause and a moral war. And I just think, again, when you have revolutionary, or when you have an ideology that's based on revolution, and then you're bad with math, then that's just going to end in tears, is the math that I'm looking at there. All right, I don't think we're going to get to see these comments, but I'll give you a flavor of what many of them are like. They say everything is about we must hold, we must stick together. Do not sell your shares. You know, do not give the shorts an advantage. Hold and buy more. We have to stick together. As an army, we will win. Again, I go back to what I tried to tell them this morning. That's not your enemy in the markets. That's not what is, you know, that's not the enemy you need to conquer to win long term and consistently in the markets. And it's a solo journey. You know, you're not, you can't find an army to help you win. What you do is you identify good companies and then find out who else might be buying them. Like, so if you were in Tesla, you did well because there was some really smart money joining you, like Ron Barron of Bamco, managing 40 billion. Bailey Gifford of Edinburgh, Scotland, managing like 250 billion. Who else? Geode Capital with managing 800 billion. And then obviously Kathy Wood with her thesis, because those early investors had a thesis about Tesla winning long term, then other big investors joined them. So that's the army you want to be a part of sometimes, is recognizing something early with good fundamental analysis, and then it pays off as more funds and more money move into a space. And I just reviewed this yesterday for Zacks Ultimate members, that the large holders like Ron Barron, like Bailey Gifford, they don't want to sell Tesla. They only had to sell some shares because it became too large a percentage of their portfolios, and they just couldn't have a stock that was 10 to 15% of portfolios. So they had to trim some and take some profits, but they still want to own Tesla for another decade. So that's the kind of army you want to be a part of, is good fundamental analysis, and then the tailwinds of the whales of Wall Street can move your stock where you think it's going to go. All right. Thanks for joining me in the kitchen. We'll talk to you next week.